Hi, folks. This is Hyman from the Logical Investor, and I just wanted to encourage you to share about what's happening at SeanHyman.com because it's imperative that people be aware of what's going on now in the U.S. stock market and global markets. It's very crucial. We are likely entering a bear market, and the Apple warning from today, which I want to talk to you about, is just characteristic of the surprises that happen in bear markets. Before we get to that, I would like to encourage you to share on my Facebook and also on several places on SeanHyman.com. I've got a recent interview that was done from Voyage Dallas magazine, and they did a interview on me and tells a little bit about my background and just a little bit about what I do at Logical Investor and some of the links where they can contact me. So I'd appreciate it if you guys would share that around. That would be very, very helpful. So I've been talking about Apple for a while now, and you can see some of my articles on the site why Apple is very risky right now, yet few people realize it. The pros have been selling Apple, but they're not telling you yet. I mean, there's all kinds of things on my site at SeanHyman.com. That's SeanHyman, SeanHyman.com, that I tell you about that you can actually access for free. There are paid areas on the site for specific buy and sell recommendations, which are in the premium newsletter section, and weekly videos that are for subscribers and things that. So for exact stock recommendations and things like that, that is in the subscriber-based area, which is only $197 a year or $19 a month, either way you choose to pay for it. But my point being is not to necessarily gain subscribers. My point here is to alert you that there's a lot of free information that you need to keep yourself aware of. And if you are a believer in Jesus, if you're a Christian, we are called to steward our assets well and to be good stewards over all that God has entrusted us to, even our money, our savings, and yes, our investments. And many Christians do a poor job in this area. And so this is something that I can help you do, help you reassess your investments just by the free information that you see on the site. Will give you a lot of clues to what's coming, because if you just watch the nightly news, you're going to see everything in the rearview mirror. In other words, after it's already happened, after it's too late, that sort of thing. And what you'll find by following my site is that I write about a lot of things and warn you about things well ahead of time and before they happen. For instance, Apple just warned that their revenues were going to be horrible, and I mean they had this big, huge downdraft in aftermarkets. You can see it right here, where Apple's stock was in the 157s, 158s. And then it drops to the 146s, 147s within minutes after in after hours trading, and so it lopped $10 or $12 per share off in after hours trading, and about 7% off the stock. Well, you know, if you've been following me, I have been warning about the risks in Apple for quite some time, along with the risks in Facebook, Amazon, Netflix, Google, Microsoft, etc. And so most all of those have taken really sizable hits that, you know, definitely could have been avoided for those who were even paying attention to even just the free section of the site, much less the more specific recommendations that come in the monthly newsletters and the weekly videos. So I would encourage you to check that out, because I believe that it will be a help and a blessing to you. Well, let me show you some things here with Apple. Apple, of course, this chart here is not like the after hours chart that I was showing you. It only shows the closing price from yesterday. But what I want to show you is that, you know, Apple has been showing huge signs of risk for quite some time. And of course, my subscribers know that anytime the price gets way away on this weekly chart, away from this 200-week moving average, that each time that happens, it poses tremendous risks, as we saw here in 2012 and early 13, when people, you know, didn't see the risk ahead of time coming, but yet we did, and we dodged that bullet. We dodged it again, and again, we enjoyed the upsides of it, but we dodged the bullet on the downside. Again, if you were a former subscriber, you remember that. When we saw this downdraft coming and we avoided that. We've been in and out of it several times, but we dodged these downdrafts. And here was another one that I've been warning about for a little over a year. This had run up so high, and Warren Buffett had even bought into it. And I said that I believed even he was making a mistake in this point at buying so high. And of course, so far that's proven to be accurate and true. But in addition to these huge risks where the price is way away from this 200-week moving average, which shows us some risks, you can see that the uptrend line in the final push of the uptrend broke. And then also you can see that in after hours we are down into 146s to 148s, and that is a previous support level right in here. And so what you can see about that 146 to 148 level, see that's 146.59, that's 148.62. You draw that line across there, and once it goes below that, anybody who's bought and held Apple for the last year and a half or more is all of a sudden losing money. And that can help unleash the next wave of selling. But there's been many things that I've talked about ahead of time that has given us a tip off to this, and we are very much fundamentally based here. We're very much investors. We're not traders here at the Ultimate at the Logical Investor, excuse me. And so we generally hold positions for 2 to 4 years. So this is not trading. It's not speculative. It's not gambling. This is true, real world, real life investing, more like Warren Buffett style investing. And but nonetheless, we also use technical tools which show things on the charts, such as RSI divergence, which shows the uptrend was likely weakening. We saw that the price had gotten way far away from this 200-week moving average, that every time over the last 10 years when that happens, you had more downside risk than you had upside reward. And those things help us dodge the bullets of many of these types of things. Also, back on the site, just to give you another example of some things that I have recorded that could have been a help to you. Back on December 17th, I said, welcome to the next bear market downtrend in the stock market. Well, you know how the big swings and things that have come since then. It's not the first time on this site that I've warned about that. You can scroll back on this site on the fundamentals, news, and charts section, and you can see many times where I have warned about the dangers happening in the stock market, and what was being set up to happen in the future that is now unfolding. And so as an investor, you need to know things ahead of time, not when they're happening and not after the fact. And the media is good about telling you things after the fact and reporting things even as they're unfolding and happening, but not ahead of time. And as an investor, you need to know things ahead of time. As a good steward of your assets, you need to know about things ahead of time. And so it's imperative that you get that information. Even if you have somebody that you do your investments with, it doesn't hurt for you to have some additional insights and information. Again, whether you become my subscriber or not is not the issue. You need to be a great steward of what you've got entrusted to you. And so Apple has had this huge drawdown here from 232s to now 146s to 148s in after hours trading, with likely much more to go. And it's been a long time since Apple has broken its very long uptrend line, and we are likely coming to the end of the road there to where that's likely to happen, and we are likely to see this stock drop way down. Could even hit the 80s and 90s. Wouldn't surprise me. I'm not saying that's got to be the bottom of it either. I'm saying minimally it likely goes that far. Might go even far lower. And of course this has really wreaked a lot of havoc in the QQQs, which is the Nasdaq, the tech-heavy index. And of course I've been warning about it because of the same things. This has had a parabolic steep angled move, which shows investors are getting too greedy. they're getting ahead of themselves, and stocks are being driven up much faster than earnings can ever keep up. And we also see that with the price being far away from this red moving average again. Again, anytime that's happened in the past, there's been these big, dive offs and things like that that come back to it. And then, of course, this time we will likely see one that goes far deeper than that, of course, because it's been a while since we've had a bear market in stocks. Bear market in stocks look very very different than just these pullbacks. For instance, here's one that is very ugly from the 2000 period that lasted for a good 2 or 3 years. Here's one that lasted in the Nasdaq for year and a half, and again, just on the QQQs, which is just a trading instrument for the Nasdaq, it dropped from 49s to 22s. Here it dropped from 107s to 17s. So when I say they can be severe, this is no understatement. So you need to be abreast of what all is going on, because it could greatly affect your 401ks, your IRAs, your stock brokerage accounts, and how long it can take you to recoup things in the future if you're not staying up on things and learning to become more financially savvy. And so even on my site, you can go to the Ask Sean section, which again is where you can ask questions and interact with us on the site. But it's also a place where there's free resources and information. I teach you how to set up charts. I show you how to ask questions of us on the site. I show about how to be more strategic about your buys, to be more like how Warren Buffett does. I talk about the biblical side of just handling your personal finances right here. I talk about the fundamentals that matter and why they give us confidence. And this is the backbone of everything, of how we know we've got a good company and thus a good stock, and then how we know whether it's cheap or expensive. This tells us that right there, and that's a free resource that anybody can have. Why momentum trading is so dangerous. And again, you're seeing the unfolding of that right now. Those stocks that soared up so fast are tanking hard right now, and they're about to probably tank hard even tomorrow after this video because of the Apple shakeup. Technical indicators explain. So if you see these squiggly lines on my charts and you don't understand what they mean, I explain it all in this video right here. Just lots of different things, how the successful investor thinks. Again, all free resources there. One of my most valuable tools in analyzing trends. All that you can get and watch those videos and read those articles for free on the site. Again, doesn't cost you a dime. You don't have to, sign up or give me an email address or anything like that. Those are just all free for you to have there. But Apple is taking a huge hit. It's drawing down the Nasdaq. It's got S&P futures turned down overnight, and likely going to affect the Asian and European markets overnight. But the story is much bigger than just Apple, because Apple said the slowdown is coming from the slowdown in China. And as you know, China is the world's second biggest economy now, and so it plays a big global piece of the, it's a big piece of the pie in the global economy. So if the U.S. or China were to slow down, those are two biggies. And so things have been softening a bit here in the U.S. for sure, but now we're getting more signs that things are slowing down even faster in China. And so again, that could rattle the cage a bit more. But you look at the S&P 500, and again, I've been talking about how it's going to go into another bear market downtrend like we saw here or here. And when you think that stocks can't fall far, I would remind you that the stock market sell-off of 2000 that lasted till almost 2003 went from 1553 on the index to 768. So you've got almost a cutting in half there. And then here you got more than a cutting in half, almost 60%, I think, declined from 1576 to 666. Bad number, huh? So, and again, we dodged these because, again, we saw the huge risks, both technically and fundamentally, and there's fundamental and technical metrics that warn us of these things ahead of time that, again, you need to be aware of. So just looking at some of the other stocks too that have been breaking down that I've been warning about. Let me go back to only like the last 10 years on their charts and take a look at them. One, of course, is Facebook. Facebook had gotten way over, out of hand, and I talked about how it was way overdone, and that investors had just been uh, way overly bullish on it. And of course, I warned on it way early, and people thought that it couldn't fall. And not only has it fallen back under major moving averages, but under its main multi-year uptrend line, dropping now below this 200-week moving average, and could likely fall further. Well, I warned about that well ahead of time. So if you'd been a Facebook investor, or you'd have known well ahead of time. Got one of my friends out of this one early, because he listened to me. Some people will, some people won't, but this is not, again, these aren't stocks that we had in our portfolio, but they're commonly held stocks. So I commented about them on the site. So Amazon was another one. Again, it had run up a lot, steep angled uptrend, price way away from 200-week moving average. What's it do? It goes from 2050 to 1307, now in the 1500s, and likely, whether it bumps up near term or not, likely to head much, much, much further southward. So these are what's called the FANG stocks: Facebook, Amazon, Netflix, and Google. So let's look at Netflix. These were some of the stocks that led the last market rally, and those will tend to be some of the biggest market losers, as they also lead on the way downward as well. So Netflix is one that I've been warning about, because its uptrend had gotten big time steep, almost a straight up climb, and went from the 100s to the 400s very fast. And anytime those parabolic moves happen, they come to a very bad end, and they produce these upside down V shapes that this is not even over even now. It'll end up going far, far lower, more than likely, if history is our guide. And so it's broken this uptrend line. It's broken this uptrend line. Again, this is one I've warned that if people were paying attention to, there's whole articles I've got dedicated to Amazon, Netflix, and several of them that you can find on the site. Warned about these crashes coming and corrections coming ahead of time. Again, for the person paying attention, could have saved them a lot of money. Then we've got Google. Now, Google is the next shoe to drop. Google has not, Google has already shown its signs of weakness, but its worst is yet still to come. And the reason why I say that is because as soon as this really goes below $1,000 per share and holds there, it's temporarily done it already. But as of the close of business on the day I'm recording this, which is on a Wednesday, January the 2nd, it's at 1,054. Once this drops below 1,000 and continues to hold there, everybody that's bought and held it for the last year and a half or more will suddenly be losing money, and that will be heading lower. And it even is heading lower and losing upward momentum right now, because there's its uptrend line there, and it's already consolidating well below that. So the next move down for it is likely upon us fairly soon. And again, there's these indicators that we use that show that this has been losing upward steam for a while, that give you a heads up. Same thing for this indicator here. Again, these are things that investors could know and be aware of. I've got a neighbor in my neighborhood that works for Microsoft, and I've warned him on Microsoft. I don't know if he has taken heed, but I hope that he has, because Microsoft is another one that I've warned about ahead of time. You've got these indicators diverging. So as this went up, this was heading lower. The price, most importantly, the price is way away from the 200-week moving average, which tells you there's enormous risk. Investor sentiment is way overly bullish. It's going too parabolic, and it will produce that upside down V as well. Excuse me. And so when it drops below about 100 is where it's going to be a big deal for it. So somewhere in there. So it's temporarily dropped below it and rally back above it. But once it starts to hold below the 100 level, so 1,000 on Google, 100 on Microsoft, we will see this head on, and it'll have a sizable dive that'll even go far below this 200-week moving average. I'm not saying it stops here. I'm just giving you a directional move, and I'm not saying at what angle that is. They usually are at very steep angles. As they're parabolic on the way up, they also lose to a similar degree to where they form like upside down V's on their charts. So again, commonly held stocks that I've warned people on that could have saved them a ton of money. I've kept a number of my subscribers out of some of these bubbles and pops, and would love to help you as well. And so I would encourage you to come join us. And again, because if you and I know everybody listening to this is probably not a believer, but if you're a believer, if you're a Christian, you need to be a wise steward of your assets. And your godly lineage needs to have more money, because when good people have money, it's a good thing. Because when just bad people have money, it's not a good thing. Also, it affects how well your church one day will be funded through current tithes and offerings, through profits you take from your investments, through what's handed down to your lineage and goes through tithes and offerings and gifts and donations there. So there's a lot of ways where this even goes from a near-term thing to a long-term thing to an eternal thing. So it's very, very important as believers how we handle what is entrusted to us. And in order to retire, you need to be wise about your investments. In order to steward over the biggest amount of assets you'll probably ever have, you need to look after your investments, because if you're to retire and you're to have enough in assets to retire, then that means that likely you will have more in a brokerage account, whether that's 401k, IRA, or traditional taxable brokerage account, or some combination thereof, that's as big or bigger than any house you would probably ever own, and certainly more so than any car you would ever own. And what do people do? They spend more time researching the next consumable that will be furniture, electronics, clothing, cars, etc., that are only going down in value, and they'll put more time into researching those purchases than they will their stock market portfolio, or their 401k or their IRA. And as Christians, as believers, that's sad. The Bible teaches us that we need to know the signs of the times, that we need to steward our investments well. And we know that God can show us what is to come. God in Genesis showed Joseph economically what was to come, told him that there would be a famine ahead of time, told him when there would be good times, when there would be bad times. So there's ways that God can show us through modern day tools or supernaturally, either one, what is to come. And so we need to be stewarding those assets well, because in the story of Joseph, he ends up saving all those in Egypt and even some of those in the surrounding area, including his own family, because of the financial wisdom of how he'd allocated assets in the good years that took him through the bad years. We're likely to go through some bad years once again. We've had a long period of boom and good years. And if you're smart, and I know that you are, you will take heed and listen and come see what we're doing at SeanHyman.com. And again, if you're on the site and you're a subscriber or a follower, I would encourage you to share this on Facebook, Twitter, through email, Facebook Messenger, whatever you're willing to do, because we need to get the word out about this, because a ton of collective dollars and cents are going to go down the tube for a lot of people, a lot of good people and a lot of Christian people, if they don't take heed and listen. And so I want to do my part to help people avoid that. So thank you so much for watching, and God bless. Bye-bye.